Ali, what do the numbers say about where the money's coming from for stocks and what's happening with bonds?
Well, it certainly is not coming from bonds, and I think that's the underlying premise here. Is a lot of people were thinking that there's going to be a big rotation. People are going to get rid of their bond funds, buy equity funds. But what we're finding is that about $100 billion year to date, $100 billion come into equity funds, and at the same time, about $108 billion have flowed into fixed income. Where we're thinking it's coming, with $124 billion outflows in money market funds, is from underneath the mattress, savings accounts, and other places they've been stashing money for the last year or two.
And Tom, within the equity side, are we talking ETFs or mutual funds?
And right now we're talking exchange traded. Mutual funds on their own, $100 billion in net new money. If I included ETFs, it'd be $140 billion in net new money year to date so far. So even ETFs have not been as in favor as mutual funds have been as of late.
So how does what we've seen so far compare to what we saw, say, last year?
Well, it's really, and that's the tale of two cities that we've seen. Equity funds saw about, I'm going to say somewhere in about $129 billion of outflows last year. And this is, again, just mutual funds on their own. But we take a look at the fixed income funds, and we're seeing just, drastic increases in the amount of money, over $200 billion in net new money coming into the coffers of the fixed income funds. And this has been going on for about the last 4 years. We've seen a large amount of fixed income intake and then a lot of money flowing out of the equity arena, primarily from large cap funds.